Hi there everyone, welcome back to a new video. This one is going to be the only video that I personally think you will ever need on support and resistance, supply and demand, whatever way you want to look at it. So by the end of this video, even if you understand what support and resistance is, I'm very hopeful that by the end of this video, you'll have a further understanding of it and know how to potentially use it to get into some good positions. So first of all, let's very quickly just look at what support and resistance is as a whole, and then why it happens and why we might want to use it. So support is a level where an asset, so it could be, your Forex pairs, your indices, gold, anything like that, it will stop falling and it will start to rise again. So the best thing that I would always say to people is that it's like the floor. So if you picture a ball bouncing along, every time it hits the floor, it will bounce. That is the way that I look at support. So why does this happen? Why do we see support working? And basically, it just means that when price reaches these levels, it means that buyers within the market are willing to purchase that asset or currency, which will then prevent it from falling further. That's the easiest way to look at it. Resistance is completely the opposite. So I see it as the ceiling or the roof. So imagine if you were to throw something at the roof and it would bounce back at you. This is exactly what resistance is. So when price reaches big resistance areas, you often see a reversal or at least a pullback that we can potentially trade moving forward. The reason it happens is that many people, if you're in a buy position, will start to sell off that asset. Likewise, people who are looking to sell will be gravitated towards that area, which will in turn stop price going higher. Okay, so if we just look at support from a kind of drawing perspective, you can see here that basically price may move and do multiple different movements, but then you can see that there are usually areas where price will like to bounce. In this situation here, price has liked to bounce at this lower area. So when price comes back to this ceiling, the floor, we could expect to bounce. So if you imagine a ball is bouncing, bounce, 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 what's the likelihood of it bouncing here? We're not just going to enter off it. I'm going to break down some reasons we would get into a trade, but this is basically a very simple overview of what support is. Think of it as the floor and where price wants to bounce. If we look at it in a chart scenario, this is basically what you would be looking at. So obviously, I know when you go from this to that, it does look a little bit overwhelming for people if you are new to trading. But basically, all we are identifying is that price bounced, 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 bounced. So this here is where buyers are coming into the market and where price is almost like discounted and where you might see people want to buy the market. That is all it is. On the flip side, if we look at resistance, exact same situation. We've seen this area act as the ceiling or the roof, bounce, bounce, bounce. Sometimes price is going to not respect it 100% of the time. But if you have a level which has been respected multiple times as resistance, the likelihood of that being respected again in the future is also quite high. Okay? So if we look at it from a chart perspective, exactly the same. You've got resistance, resistance, resistance. Here is a good example of when price has pushed through. Resistance again, almost like a little head and shoulders pattern there. And then same again here, resistance 3 times. So you are literally just looking at the market, identifying areas in the market where price has acted as the floor and the ceiling. And then we can use them areas in the future to predict where price may go. Okay, so how do we trade it? Why do we trade it? And a little bit more details into this. So support. This is going to present us buy opportunities within the market. So I will only ever buy when price is near a support level because obviously there's a higher chance of price reacting from there. So if we look at support, think of it as a discounted price. So it's a cheaper price to buy the thing that you are wanting to buy. A lot of the time as well, if you see price flying towards a support, the people who are actively in sells may look at that support level where they're going to take profits. Okay? So you've got to think if you're a seller in the market and you see price coming down to a big support level, what are the chances someone's going to take their profits from the trade? And that means that there are now less sellers in the market than buyers in the market. The buyers then take over and price then bounces. If we look at the resistance, again, complete opposite. We are going to look for sell opportunities from these resistance areas. Think of it that once price reaches them areas, it's expensive. So sometimes what I think helps when you're looking at the market is looking at a chart and basically just saying, where is price at a discounted rate and where is price at an expensive rate? If you kind of shift your mindset to that, you will start to understand the market a little bit better and understand why price moves from these certain areas. So think of it as an expensive kind of area within the market. So we want to sell there. We don't obviously want to be buying there because previously price has pushed back from it. Profit taking. So if price is flying up towards a resistance level, people are going to start taking profits from their position. And in turn, that may cause price to pull back. So that's something obviously to keep an eye on. And if you can find tradable opportunities in and around that area, then you're potentially in a good spot to obviously get into a position. So how do we trade it? This is a chart example now of a previous trade that I actually took. So if we look at this situation here, what can we see? Resistance, resistance, bit of a fake out, resistance, resistance. Price then broke out, it's come back. Notice how support didn't hold, but then now it's come back to resistance. We had the 38 Fibonacci in line with our resistance zone, and you can see that price did a large reaction away from this area. So just think, price is coming back up to here. It's looking expensive because you can see that whenever prices reach this area in the past, it's actually pulled back. What's happened again? Price has done exactly the same. If we then flip the script and look at a support level, price has been slamming down. Notice how there was no real pullbacks in this area. Price only pulled back once it reached our support area. So if we look on the left, you've got support, 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 support. Price has come back, acted as support with a fake out. Price has then made the move to the upside. We've drawn a Fibonacci. The 78 Fibonacci is lined up with this area. And what have we seen? Price has pushed up exactly like we previously saw. So that is a very, very, very simple way to look at the market and just understand why price moves from the areas it does. Think of it as cheap and expensive. We want to buy assets at a cheap price and sell them at an expensive price. And that's as simple as it needs to be. So I am going to do some more videos on market structure and things like that. This video was mainly just understanding support and resistance, supply and demand, and how you can use it in your own trading to potentially find some nice swings. So if you have any questions about what I've gone over, by all means, drop them in the comments. I'll be happy to answer them and obviously give more in-depth explanations. But if not, remember guys, 3 videos a week. Subscribe if you are interested in seeing them.